look at reconciliation after this, and then we're going to do cost accounting and budgeting later on. But we are going to start with the stock valuation. Okay. Looking at the guideline, which is the ATP, it requires us to do the inventory valuation. Okay, it's part of term 2. And then also under inventory valuation, we need to consider looking at the inventory systems, which is a periodic and a perpetual inventory. So those are the things that we're going to talk about today before we go exactly to the inventory valuation. Okay. I hope you can see the screen. In grade 11, you did inventory systems. We're just going to relook at it again, especially periodic inventory system. That is something you looked at in grade 11, but we're not going to overlook it because most likely they're going to test it in grade 12 as well. So it is something that you need to know. Okay. Okay, we're going to do a review of relevant components of grade 11 work, and then before we move on to the inventory valuation. Have you done inventory valuation at your school?
Inventory evaluation. With FIFO and stuff.
Yes. I'm talking about.
Yeah, that's what we're doing currently.
Oh, you're currently doing it, no?
Yeah.
Okay, no problem. You see, when we talk about inventory valuation, you remember before that we did something called statement of what? Of financial position. What is the statement of financial position? That is a balance sheet. So when we did balance sheets with you, you remember under current asset, we have something called inventory there, or trading stock under current assets. So under statement of financial position, we have current assets there. And then under current assets, that's where you're going to see trade receivables. Okay. Okay, the first thing that we have there is the inventory. Inventory, trade receivables, and then cash and cash equivalents. Cash and cash equivalents. Okay. Or we can have bank there. But this is what we have under current liabilities. Okay. And then we're going to have monies there. Maybe inventory, we're going to have 200,000. For example, trade receivables, maybe 160,000. And then cash and cash equivalents, maybe let me just say 81,000 rand. Okay. So if this is your business, this is your current asset that you have in your statement of financial position or the balance sheet. For today, what we're focusing on is what? Is the inventory. That's what we are going to look at today. So now, when you have 200 rands there, I'm trying to show you why is it important for us to do this topic, inventory system. Why is it important? How does it help us in terms of the figures that are sitting in the statement of financial position? Because when we talk about inventory or inventory system or the trading stock, you know where we're recording the trading stock. We're recording it where? On the balance sheet under current assets, right? The numbers that are sitting on the balance sheet, they need to tell us a story, right? Those numbers, they're not just there for no reason, but they are telling us a story. For example, this trade receivable, it tells us the people that are owing us. So if you don't understand that, then you have a problem. If you don't understand that these 160,000 rands of trade receivables, we talk about those debtors that are owing us. But now, again, when we talk about the trading stock or inventory, it tells us something. There is a story behind this number of 200,000 rands there. Okay, number one, what does this inventory say? What does this 200,000 says? It says that on the floor, we have trading stock to the value of 200,000. On the floor, what am I doing now? Sorry. Says on the floor, we have trading stock to the value of 200,000 rands, which means now in your balance sheet, if you record 200,000 as trading stock, that is a balance sheet for your business. On the same day, you recording this 200,000 rands, you telling me that if I can come there at your business and then count the stock that is sitting on the floor, I'm going to find a stock to the value of 200,000 rands. Do you agree with me? Does that what I'm saying? Does it make sense?
Yes, it makes sense.
Okay, this is the first thing these 200,000 tell us. This is something you need to understand because it's not just sitting there for no reason. Number one, it tells you that if I come to your business, because you recorded that you have 200,000 worth of stock. If I can come there, you can't tell me that the stock is not here, sitting somewhere. I need to see it, right? I need to see it, that stock. Okay, number two, the stock exists. The stock exists on your business. Okay, whichever business you're running, this stock, this 200,000, there's a stock that is existing at your business. So it has to be a physical stock that I can touch, that I can see. That's what this 200,000 is telling us. Okay. Number three, the stock that is sitting at your business or that you currently having worth 200,000 rands, which means now if I can come to your shop wherever you're operating your business, and then I can take the quantity there, which means whichever stock that you're selling, if you're selling televisions, and then I take all those TVs, the quantity of them, if you have 50 of them, and then I multiply them by the price, I'm going to get how much? 200,000 rands. Okay. If I'm trying to check all of this, if I come to your shop and I check what I can see here, then it doesn't equals to 200,000, then there's a problem. There's something wrong on your accounting records. That's why we're going to do this topic, because it is trying to address all these issues that we may have. Because some other people, they don't know accounting, they don't know how to record what does the numbers on the financial statements mean. But you as an accountant, you need to know that, you need to understand why we're having inventory systems. Okay. Now, let's start here. Okay. So we have introduction here that we're going to look at. They're saying here the use of perpetual inventory system is only possible with the use of inventory computer programs connected to cash register system operated by the business. This is the first system that we have for recording inventory. This is the first inventory system. We call it a perpetual inventory system. And that inventory system is suitable for the business that is recording inventory using what? Computer programs that is connected to computer programs, the computer to cash register systems operated by the business, which means now inside your business, whenever you're bringing in the inventory, it has to record automatically via the computer. Even if you're selling that inventory, it has to record automatically. That is the suitable system to use there. It is what? A perpetual inventory system. It is a computerized system, actually. A perpetual inventory system is a computerized system, indicating that whichever inventory that is moving in and inventory that is moving out, it is being recorded by the computer automatically. You don't have to count it manually. So now If you have a computer inside your business, it is going to help you to keep track of the movement of the trading stock. If you buy the stock, the computer will record the stock coming in. If you sell the stock, the computer will record the stock moving out immediately. Immediately. So that is a computerized system. Even if there is a stock damaged or the stock lost, you have to update on the computer that the stock has been lost. Okay, these advanced technologies interlinked with various branches of particular business. Hence, the trading stock account can be drawn up to show the movement of stock, eventually indicating the value of stock on hand as soon as any transaction concerning the stock movement takes place. If I buy trading stock, it updates to say, okay, as an opening, I had 20,000 rand, and then I buy stock of 5,000 rand, which means now I have 25,000 rand. If I sell the stock of 3,000 rand, I'll be left with 22,000 rand. It keeps on updating the stock balance or the inventory balance to say any movement that is taking place, it will be recorded by the computer immediately. So you can see now that the perpetual inventory system, it keeps track of your inventory movement daily, right? Anytime there's a movement of stock, it will be recorded by the computer. That is a computerized system. That is perpetual inventory system. So if they ask you to define the perpetual inventory system, you need to tell them that is a computerized system that is linked to the computers within the business to keep track of all the movement of the inventory. So that is the definition that I'm expecting you to provide. You don't need to cram this thing. You don't need to cram it. You don't need to go and memorize it. You just need to understand. A perpetual inventory system, that is a computerized inventory system that keeps track of the movement of inventory daily. What is difficult to say that? There's nothing difficult on that. Like there's nothing difficult. Whenever they're asking you something like this in a test, it's something that you should be able to do. Now we're gonna be able to talk about the periodic, because there's a second inventory system which is called periodic inventory system. How is it different from the perpetual? We need to know that. But perpetual inventory system, that is a computerized system. A computerized system that is linked to the cash register. What you can see at ShopRite when you're buying something and then by click kalapana etilini, that is a computerized system. That is, they're using perpetual inventory system kwa ShopRite, because you can see there, as soon as you buy something, and then the time benza leyo nto leyo, i-stock sabo siya-updateka lapha kwi-computer automatically. So that's what they're trying to say here, to say is only possible with the use of inventory computer programs connected to cash register systems operated by the business, right? This advanced technology is interlinked with various branches of a particular business, which means all branches of ShopRite. Any movement of stock, it is being recorded immediately. As soon as move stock lapha ethilini bethi tit iyarekhodeka le nto le, and then i-update ukuthi okay, besinezinkwe eziwu-100 njengamanje senezinkwe eziwu-8 eziwu-20 seyithengiwe. Awudingi lapho ukuthi uzuyobala ngezandla, no, i-system izokutshela lapho. Yeah, the system is going to tell you, it is going to indicate to you how much inventory or how much trading stock is left. Okay, now let's look at the second one. However, okay, so what they're saying here, however, not all businessmen can afford the implementation of the above electronic procedure in a business. Which is true, not everyone. If I can start my own business now and I don't have money for this computerized system, I cannot afford to implement it. Right? Not all businessmen can afford the implementation of the above electronic stock procedure in a business. In many instances, the nature of the business does not make it possible to use procedures in the business. For example, a local community supermarket may charge a customer for the number of sweets sold 10 times bubble gum. 10 times of bubble gum. Okay. The trading stock account cannot be physically updated at the point of each item sold, right? Businesses cannot operate the perpetual inventory system, will make use of what? Periodic inventory system to control the flow of their stock and update their cost of sales. Now, that is a problem, okay, when it comes to inventory system. A computerized inventory system, which is a perpetual inventory system, that one is the most preferred system because it is, although it's not easy, it requires people who are trained, obviously, but it is the most effective one and it is the most efficient one each and every business may have. And all the big companies, they're using perpetual inventory system, which is a computerized system. But when you go to local communities, most of the businesses there, obviously, they cannot afford that system. They're going to use a periodic. Periodic is more of a manual system where people, they count stock physically. They cannot keep track of the movement of stock. If you can go to a tuck shop again in the afternoon and ask them, how many bread did you sell today? Maybe they can tell you because bread is just, there's not a lot of bread on it that they order. They can tell you, it's okay, maybe in the morning business because we're 30, but now we're left with 20 bread or we're left with 10 bread, so which means we sold 20. They can tell you, but that is something that they counted physically. But when it comes to something like sweets, can they tell you how many sweets they sold on a daily? No, they cannot tell you that. Like they can, so those small items that customers are buying it in bulk, or maybe that is moving quicker than obviously bread or other type of products that is being supplied by that tuck shop. It is going to be different. It is going to be different. So they cannot keep track of stock daily when you're using a periodic inventory system. That's why under periodic inventory system, stock is only updated at year end, once at year end. They're only calculating closing stock at year end. Perpetual inventory system, stock is calculated daily, which means now if I can go to shop right now and ask them how much is your stock that you have currently, they will tell you. They will tell you because they will just go to their computer there and check the balance. They will tell you how, because they're using perpetual. But go to a tuck shop in your area there, they won't tell you how much stock they have inside their tuck shop there. It is impossible for them because they're using manual, they're using periodic inventory system, even though they're not aware, because they don't even know about periodic and perpetual. It's a tuck shop. So it's run by someone who is uneducated, obviously. They don't even know, but looking at how they do things, it is a periodic inventory system. Difference between periodic and perpetual inventory system, something that is very important that you need to know and you need to understand what is the difference. Already, from what we've discussed now here, what is the difference between the two? If I can ask you.
A perpetual inventory system, by it's updated immediately, like during the purchasing process, and then a periodic inventory system yenzeka after, like mhlambe monthly or yearly.
Exactly. That's very good. That's very good. It doesn't update immediately. That is a periodic inventory system. It doesn't update at all until we have to do the stock count. Maybe if we decide to do it monthly, once a month or once in a year, it depends on the policies of that company. But periodic, it updates immediately, or it updates on a daily basis. It updates immediately after the movement of stock. That's what perpetual do, of which periodic doesn't do that. But let's look at the differences, what they say, what they're telling us here. Firstly, we're going to look at the periodic, right? They're saying here stock taking is done on a continuous basis, right? Throughout the year, right? They're doing stock taking throughout the year because the system suits that for them. It allows them to perform the stock taking throughout the year. The system keeps on updating the closing stock throughout the year, so it's not a problem for them. But if you look at periodic, stock taking is completed once a year at the end of the financial year. That is the first difference between the two. That is the first difference between the two. The other one, stock taking is done on a continuous basis. By saying on a continuous basis, they're trying to tell you that the system calculates the closing stock continuously. Okay? But under periodic, they're not doing that. They can't keep track of the movement of stock until year end, where they only do the stock taking. Then that's when they will see how much stock did they sell, how much stock did they buy, how much stock is left. You see. Number two, the trading stock account is debited each time that stock is purchased and credited each time that stock is sold, right? The trading stock account is debited, which means now they debit inventory whenever they're buying stock. They debit the trading stock and they credit what? Whenever stock is sold, they're crediting that trading stock account. As a result, the cost of inventory can be determined at any time during the year. Because that system is keeping track of the movement of stock coming in, stock moving out, it keeps track of that movement, which means you can be able to determine the balance. You can be able to determine the cost of the inventory at any time during the year. Even the closing stock at any time during the year, you can be able to determine under perpetual inventory system. And something I want to highlight here is this trading stock account. Here under perpetual, we're talking about trading stock account, but here we're not talking about trading stock account. We're talking about purchases. Here we debit trading stock if we're buying inventory, but this side we only debit purchases. We're not debiting trading stock. Okay, let's go for number 3. Cost of sales is determined at a point of sale. Can you see? At a point of sale, we are able to determine cost of sales. The cost of sales account is active when merchandise is sold or returned. Any movement of stock, we are able to record it at that time and determine cost of sales, determine closing stock, determine the sales amount, everything. We can do it immediately because we have the computerized system. We have the system that allows us to do that. So what is the problem? What is the problem? Number 2 or number 4, it is a sophisticated system that depends on technology for its application. Yeah, that is a disadvantage there, or I can say it's not really a disadvantage. Only for those who cannot afford it, it is a disadvantage for them. It is something that they cannot afford because this one, it depends on technology. For you to be able to use a computerized system, it depends on the technology. You need to have proper equipment for you to be able to maintain your trading stock on a daily basis. But if you don't have that, you cannot apply perpetual. You're just going to stick with periodic. Periodic is too risky. It is too risky because you only calculate stock once a year. You cannot detect stock that is lost, stock that is stolen. You cannot, it's not easily to detect that. So it is easy for employees to steal the inventory or to steal the trading stock. Very easy for them. Crime, you cannot prevent it that easily when using periodic. Okay, let's carry on. Number 2, for periodic, they're saying here, the undertaking does not have a record of cost of inventory on hand during the financial year. Can you see there? The undertaking does not have a record of cost of inventory during the financial year, which means during the financial year, we cannot determine cost of inventory on hand. We can't. We can only get that at the end of the year. We can only get the cost of inventory on hand at the end of the year. That is periodic, which means so that's when stock taking is occurring. Like that's when they start counting the stock at the end of the year. Number 3, the cost of sales account does not exist. You can see cost of sales has to be calculated, and this is done usually at the end of the financial year. When the merchandise is sold, the cost of sales cannot be determined under periodic. Under perpetual, you can be able to determine the cost of sales here. As you can see, the cost of sales account is active when merchandise is sold or returned, which means you are able to determine cost of sales, but under periodic, you can't. You can only calculate cost of sales once at the end of the year. Number 4, it is a simple system and inexpensive to manage and operate. Very easy, simple to use. It is for those who cannot afford computer. It is for those who cannot afford technology. Then they can just focus on this one. Okay, but now look here what they're saying, which is very important. Notwithstanding the system of stock taking, all inventory validations require a physical count at the end of the financial year. Yes, even if you're using perpetual inventory system or using periodic, you have to do the physical stock count every day, because there are those movements that even if like the perpetual inventory system is able to keep track of the movement of inventory daily, but there is that movement that it cannot keep, because the only movement that the system can keep is the one stock that has been sold, stock that has been purchased. But stock that was damaged, it requires a human intervention, that one, to take it to the system and then record it there. Stock that has been returned, okay, it can keep track of that. The system will be able to do that. But stock that is stolen and damaged stock, it's very difficult. So we have to do what we call, physical stock taking at the end of the year, irregardless of which system is being used. That's why when we were doing balance sheet, you will remember we usually had what? Trading stock deficit, right? Trading stock deficit. That's when we were comparing. That's when we were comparing the physical stock taking with the stock that is sitting on the trial balance. Then we check the difference between the two. It becomes a stock deficit. It is because of the stock that has been stolen or stock that has been damaged and then maybe was not recorded by the system. Because even if it's perpetual, even if it's periodic, stock that has been stolen, stock that has been damaged, it's not easy for the system to keep track of that. Because remember, the computer system, as I said before, ukuthi into endlula ethilini iyona lezo recordwa ikhompyutha. Into endlula lapha ethilini, yabo. Noma istock siyangena khona la sidlula khona, bakwazi ukuskena ama-barcode, then siyarekhoda automatically. That is perpetual. Masidayisa futhi siyaphuma ethilini siyarekhoda automatically, but leso sitshontshiwe sondlula busona, because akekho umsebenzi ozoziveza leso stock. Uma isitshontshe izosifihla somewhere, aphume naso ngaphandle kokuthi iscanwe, ngaphandle kokuthi recording. So i-deficit will always be there. Most likely it will be there. Okay. Number advantages and disadvantages of perpetual and periodic system. There's not a lot of advantages and disadvantages for each of them. It's based on differences as well. It is based on differences. For example, for periodic, we said it is not expensive to use. That is an advantage for those who are using periodic. When they say it is simple, perpetual, it is expensive. That is a disadvantage for perpetual. But for the fact that you can control your inventory system very easily under perpetual, let's look at the advantages. Perpetual stock system. Advantages, number one, there is a better control of trading stock, as a physical stock count of the trading stock will show losses in trading stock. Hence, theft of trading stock can be detected easily. That is the biggest advantage of a perpetual inventory system. It is easy to detect stock theft. So when they start asking you about this thing, is you must be able to explain it in a test, because they are going to ask you what are the advantages of perpetual inventory system. You have to be able to tell that there is a better control of trading stock under perpetual. It helps us to control trading stock better. We can be able to detect trading stock, theft of trading stock. That is an advantage of perpetual stock system. But what about disadvantage? The trading stock accounts can only be maintained through the use of computer programs. You see, in maintaining stock records, it is very expensive system to maintain. That is a disadvantage. As I told you, Guti, perpetual can only maintain through the use of computer programs. If someone steals something and it doesn't move through the computer, it's a problem. You cannot detect that. You cannot identify that. Even if something is damaged, makuphuma nje isigubhu samafutha lapha, siphelela phansi lapha, sigcine singayithile into zezigubhu samafutha, sigcine singayanga ndawo. How are you going to detect that? There's no way. You see, the only way they can detect that is through maybe if the employee uzosithatha mhlawumbe isigubhu ahambe asirekhode ukuthi okay lesi siqhumile so siyasiluza, asirekhode ku-system, then it will be easy. But izinto lezi ezimoshakalayo ngaphandle kokubonakala akukho lula ukuthi i-system iziveze lezo zinto. Ingakho kubalulekile ukuthi we still need to do stock count, physical stock count at the end of the year, even if we're using perpetual or periodic. So, and it is very expensive system to maintain. These are the disadvantages of perpetual. Looking at periodic advantages, this is a cheaper system to maintain and is suitable for businesses that sell a variety of items where it is difficult to determine the cost price of items sold. Suitable for small businesses, that is an advantage for periodic. It is cheaper system to maintain and it is suitable for businesses that sell a variety of items. Usually those are small businesses. So it does not exclude small businesses. You cannot say, I cannot start a business because I cannot afford perpetual inventory system. We still have a periodic inventory system that is allowed and you can be able to maintain it. Whether you're a small business or you are a big company, you can still be able to maintain it. That is an advantage of a periodic inventory system. Then a disadvantage, this one is too risky, even though it is suitable for small businesses, too risky. You see, if Shoprite can implement periodic system, it's a problem. It's going to be a big problem for them. I'm just making an example. If Shoprite can say now we're changing from perpetual to periodic system, employees can be very happy. Bangantshontsha too much. I'm telling you, bangantshontsha izinto too much and ngeke baze kube lula ukuthi bababambe, yabo. Ngeke kuze kube lula. So looking at the disadvantages of periodic, theft of trading stock may not be detected as there is less control of the trading stock. There's no way they can detect someone who is stealing something. The trading stock on hand can only be determined through physical count. That is another disadvantage. Under periodic, you see, you need to count it physically before you can know how much stock you have, of which under perpetual, even though you still need to count it physically, but the system can still tell you the closing stock at any time of the year. You see, yeah, that is a difference between the two. That is advantages and disadvantages of each of these two inventory systems. Now, because these systems are different, both of them, even the accounting part, it will be different. You will see when you start doing the accounting for periodic, the accounting for perpetual, it will still be different because the systems are not the same. Both of them, they are not the same. So things will be different. Okay, 1.4, let's look at the differences in the accounting records now of the perpetual and the periodic inventory system. The accounting records are not the same as well because the systems are not the same. You need to check how do they record this side. This table is very important because it allows you to see how do they record trading stock that has been purchased, trading stock that has been sold, trading stock that has been returned to the supplier. How does perpetual system record it and how does periodic system record it? Okay. There's a couple of them before we go to the example, but we're going to look at them. Let's see. Purchased merchandise and paid by check. What is merchandise? You know that merchandise is still the same as trading stock, né? Did I tell you about that? I'm asking, do you know that merchandise is still the same thing as trading stock?
Yeah.
Okay, perfect. I'm happy about that. Merchandise, say trading stock, just that they like using different terms, which I don't have a problem here with that. If you buy trading stock or if you buy merchandise and you pay by check, these days we're no longer paying by check, but we're paying through EFT. Now, the journal, it is going to be a cash payment journal, yes, because you paid by check or there was a movement of cash here. So you paid the stock cash. So it will go to a CPJ because you're buying. But now, what about the source document? It is going to be a check counterfoil. Okay. If you're paying EFT, you obviously going to have a proof of payment that you're going to send there and all of that. The bank statement can also prove that you paid for something. These check counterfoil things, they're no longer working now. They can still test you on, but these are the things we're no longer using. Perpetual inventory system, periodic. Let's see what is the difference between the two. You see, under perpetual inventory system, you purchased merchandise, which is a trading stock. You debit trading stock and you credit bank because you bought this for cash. That is perpetual. But under periodic, what do? You debit purchases and then you credit bank. So the only difference here is that purchase is under periodic. Under periodic, I want to tell you something. Under periodic, we don't talk about inventory. We don't talk about trading stock. But trading stock is replaced by purchases. That is periodic. You must know that whenever we're dealing with periodic, we always talk about purchases. Then under perpetual, we always talk about trading stock. We're recording the actual trading stock that is moving. But under periodic, because we don't know the movement of trade, we record it as purchases. Okay. Now we move. Purchased merchandise on credit. Now buying merchandise on credit, everything will still be the same here, except that now this is a creditors journal because we're buying it on credit. And the source document will be original credit invoice. That will be original credit invoice. You can see that you get the invoice if you're buying on credit. Then you debit trading stock, you credit what? Credit as control because you're buying on credit. And then you debit purchases and then you credit what? Credit as control. So the only thing that is changing is bank because other than that, everything is still the same because we're no longer buying for cash now. So that is the difference. That is the difference. Okay. Transport charges on merchandise purchased by check. You know very well that when you're buying trading stock, you know very well that when you're buying trading stock, it is possible that they're going to charge you for transport. It is possible that they're going to charge you for transport. Okay. Now, how do you record that? Transport charges on merchandise purchased by check. Obviously, that is going to be CPJ. And then check counterfoil. Okay, that is fine. Trading stock. We're debiting trading stock and then we're crediting bank. Okay. That is under perpetual. That is under perpetual inventory. It imali transport. Mangabe uzothenga something which is a trading stock and you have to transport it to your place. Those transport costs, you're going to capitalize it as part of trading stock. That's why we need to debit trading. So you can see here, we're not debiting transport cost, but we're debiting trading stock. This is not an expense, but it is an asset. It becomes part of trading stock as a current asset. And then you credit bank. When it comes to periodic, you're going to say debit carriage on purchases. You see, I told you that under periodic, we don't talk about trading stock there. Trading stock is replaced by purchases. So we're going to have a carriage on purchases and then we credit bank. This carriage on purchases, we are going to use it to calculate cost of sales at the end of the day. Even the closing stock, it will be part of that calculation. It will be part of the calculation. Okay, returned merchandise. Let's talk about the merchandise that has been returned. Returned merchandise. What is happening with this one? Creditors allowances journal, because if we're returning stock to suppliers, they need to pay us back or they need to reduce our balance, our credit balance, the money that we're owing them. Okay, they're saying here duplicate debit note. Okay, these are source documents. I'm not too interested with these things. These are grade 10 things, not for grade 12. So I'm not interested about. You see this general source document, it's not something that I'm interested on. But let's look at perpetual inventory system. We're going to debit creditors control because we're returning something that we bought on credit. There is creditors control there. Initially, it was credited because we were buying on credit. Now that we're returning, we're going to debit that creditors control and then you're crediting the trading stock. It's a reversal of that journal entry there on top that you can see. You see this journal entry, we're reversing it here, which is going to be the same thing again under perpetual. We're going to debit creditors control and then credit what? Purchases. It's a reversal of that journal entry that you saw there. It's a reversal of that purchase. Okay. Accounts received for customers, custom duties. Okay, account received for custom duties. Custom duties is the same thing as what? We're treating it the same way as what? As trading stock, as we're treating it the same way as transport cost, transport charges. We capitalize it to inventory. This is a creditor's journal because we're receiving an account received, which means now we are owing them. So now original credit invoice, which you can see it's the same as that original credit invoice that you can see there. It is the same as this original credit invoice that you can see there. Then we debit it to trading stock. Custom duties, we have to capitalize it to trading stock, and then we're crediting what? The creditors control, meaning that we are owing those custom duties. We still need to pay them. Okay, we still need to pay them, but this is the same as transport cost, just that transport cost was paid in cash. This one, we're owing it. That's why we have a creditors control here. But transport charges and customs, you're treating it the same way. Under periodic inventory system, we're going to debit custom duties and then we're going to credit what? Creditors control. That is what we're going to use. These custom duties, we're going to use them when we're doing what? When we calculating the cost of sales. This table is very important. It is going to help you. It is going to help you when we start doing these calculations. I'll come back here and I'll be asking you what we spoke about here. Please, this is very important. It's something that you need to know. I'm talking about it, but this is work for grade 11. It's something that you should be knowing it, but we have to go through it again because we're going to use it a lot. Cash sale of merchandise. Now, if you're selling trading stock for cash, this is the first sale transaction. It's a first sale transaction. You need to see now how does. That's why now under perpetual, we're having something called 4-line journal entry. 4 accounts are affected by perpetual, but under periodic, only 2 accounts. Let's see. Cash sale of merchandise, CRJ, because we're receiving cash. Okay, then we have a CRT for the source document. But now, let's go to perpetual inventory system. Okay. Perpetual inventory system, we're going to debit bank because I'm receiving cash, and then I'm crediting sales because I'm selling trading stock. And also I'm debiting cost of sales, and then I'm crediting trading stock. You can see there are 4 accounts that are being affected here. 4: bank, sales, cost of sales, trading stock. But when it comes to periodic, we only have bank and sales here, nothing much. We only have bank and sales. Only 2 accounts are being affected there. It's only bank and sales. So we're debiting the bank because we're receiving cash, and then we're crediting what? We're crediting sales. The other line is not applicable for periodic system. It is not applicable. So whenever you're selling something under perpetual, there will be 4 lines, journal entry. As you can see here, 1, 2, 3, 4. 4 accounts being affected, but this side is only 2. Why we don't have cost of sales, why we don't have trading stock is because this system does not keep track of trading stock and cost of sales. It does not keep track. This one, it does, because the time ushaya into appetilini, it recorda ku trading stock now cost of sales are recorded, but la ayikho leyo nto leyo. So it's not possible for us to have cost of sales and trading stock under periodic. Which is the same when you're selling it on credit. Obviously, it's going to be the same. We're going to have debtors control instead of bank. That's the only thing that is going to change. Instead of bank, we have debtors control because we're now selling it on credit, but it's still a sale transaction. So we're going to have 4 accounts affected. We're going to have 4 accounts affected here, as you can see. And then this side, we only have 2. Now, talking about merchandise returned by debtors. Again, if it's something about a sale, transaction that affects debtors, you must know there will always be 4 lines or 4 accounts being affected. There will always be 4 accounts being affected. If you look here, debtors allowances debited, and then you credit debtors control. Okay, that is going to be a merchandise that was returned. And you must remember this debtors allowance is like a sale, because this thing is reducing a sale. We subtract debtors allowances under sale because these are returns by customers. And then we debiting trading stock and then creating cost of sales. It's an opposite of what we're recording there. The reason why we're debiting trading stock is because our stock is increasing. Our trading stock is going to increase. That's why we're going to debit trading stock and then credit cost of sales. Then now this side, we're saying debtors allowances debits, and then debtors control credits. That's the only thing we do here, because we're just reversing those sales and debtors, and then we're reversing them only, but the other lines are not applicable. Now, trading stock that was donated, that is an expense. Donation will be an expense because we're donating trading stock. So it is going to be donation expense debited under perpetual, and then we're crediting what? Our trading stock. But under periodic, it is going to be donation expense and what? And purchases. Remember, I told you that whenever there's a trading stock, it will be purchases under periodic, because we don't record trading stock under periodic. We only record purchases. Okay. Merchandise taken by the owner for personal use, we know very well that's drawings. Okay, we debit drawings, we credit trading stock. Because stock is decreasing, drawings are increasing, that's an expense. This side, we debit drawings and we credit what? Purchases. So that is a difference. Okay, merchandise used for advertising purposes. What's going to happen there? We debit advertising and then we credit trading stock. This side, we debit advertising and then we're crediting what? Purchases. Instead of trading stock, we're taking purchases. Okay. Loss due to fire or burglary. So we lost a trading stock there. So we need to debit loss due to fire and then we're crediting what? Trading stock. Sometimes this loss due to fire, we call it trading stock loss or inventory loss. You don't really explain it like loss due to fire. You can, and on your journal entry, you can, or as an expense on your income statement, you can. But it's actually an inventory loss or it's a trading stock loss. Okay, then you credit your trading stock. This side, we're going to credit purchases, debit the loss due to fire. Okay, deficit in the trading stock, surplus in the trading stock. This one with something that we know. Trading stock deficit, and then trading stock is credited. This one is not applicable. Why? Because we cannot see that deficit. We cannot see the deficit. It's not easy to see it, because there's no computer system that is keeping track. Even the surplus, here we do record the surplus, debit trading stock, crediting trading stock surplus, but this side, it is not applicable. You can see. So this is what is more important, what I wanted us to look at for today. And then I have two examples here. I'll send the example to you guys to work on it. And then when we meet on Wednesday, we're going to be looking at these examples. There's two examples here, which is we have example 1 and example 2. Right, so we have example 1 and example 2. Okay, so please look at it, and then we're going to do it together when we meet on Wednesday, and then we carry on with the inventory valuation. That's where we're going to be looking at FIFO method. We're going to be looking at specific identification method, weighted average method. Any question on your side, Smanga?
No.